morning, everybody.
Good morning.
How is everybody this fine Tuesday? Taco Tuesday, I
Good
think it
morning.
is.
I thought it was Thursday Tuesday. No, it's Thursday. Taco Tuesday.
Taco Tuesday.
Thursday.
Hump Wednesday.
Yeah.
Wings Wednesday, isn't it?
What is it?
Hump
Wings
day.
Wednesday. Wings. Yeah, it's Wings Wednesday.
Yeah. Volatility Friday.
Volatility. It's volatility week.
It,
So
isn't
Yeah,
it
really.
Throwback Thursday?
it could
Throwback
be.
Thursday. That's
I hope
right.
not.
Yeah.
I don't want to go back. I want to go forward. So how's everyone doing on this fine Tuesday? Um, so it looks like a little bit, the Dow was up yesterday 1.29%, but didn't erase the 1.86% from the day before deficit. NASDAQ was up 2.21. The day before or Friday was down 3.56. S&P was up 1.5. Closed Friday down 2.71. So we didn't really gain much, although we did come back. China came back and they vowed they're going to fight to the end on the tariffs. So we're looking at the markets right now. Let me put it up here for you guys. And Dow 345, 330, S&P down 60, NASDAQ down 279. I said yesterday, the market structure because of Friday for me was broken and it needs to settle back out. And so yesterday, I'll show you the charts. They went up, but it didn't get past resistance on a lot of it, even when we rebounded. Um, and now we're seeing it again. So it's not, market hasn't settled out. And that's why I said I'm really not trading. I gave you guys some stocks to look at, and we'll take a look at where they were. But again, uh, nothing that I want to be in right now. And that's just my risk management style. But you guys are welcome to trade as you do. Follow your trading plan, implement your risk management. But I find that it's better that you don't need to be in these unknown market conditions, especially when the market structures fractured like it is right now. I'm going back and forth with China. Trump put out a tweet on Sunday and everything was good for the market yesterday. And then China retaliated back and said, we'll fight to the end. And now we're playing, we're putting taxes on each other's ships coming into ports and whatever. So it'll work its way out, but it's a little rough to get to that point. We also had Jerome Powell give speech. We had Broadcom and OpenAI continue that vendor circle, partnering up with each other. I put something in my Discord or my office on that. Bank earnings came out this morning, and you get the headlines. And JPM beat on EPS and revenue. They had strong performance in their investment banking, but they had an increase in credit loss reserves. Okay, and that's going to be the theme. Goldman Sachs beat on earnings and EPS. Record trading revenue and investment bank fees is where they got their money from. Wells Fargo beat on EPS and missed on revenue. And how did they beat on EPS? They had cost management. They're cutting their cost. And then they bought back a bunch of stocks, so they reduced their shares. It made their EPS go up. We talked about how companies are doing that. And now they're focusing on expense control. So to me, that sounds like Wells Fargo is feeling some pain. And Citigroup also beat on earnings and revenue. They had higher net interest income and increased trading, so that's where they made their money. It offset the weakness in some segments. They said when I went and looked at those segments, it was credit card defaults and commercial real estate issues. BlackRock beat on earnings per share and revenue. They have strong accounts under management. Of course, they're the largest asset manager in the world. And inflows into their ETFs, basically the IBIT, which is the most successful ETF. It's the Bitcoin ETF, and they're making tons of money on that. In fact, when Bitcoin went down on Saturday and Sunday, they actually bought at 105,000, so they bought a ton there. But what the concerns were when you dig into it a little bit, I didn't have too much time to dig in because they came out, but there were two things: provisions for credit loss due to higher net charge-offs. And where were the net charge-offs? What we've been talking about: credit cards and auto loans. Okay, so they're losing more money. They're putting more money in for that. And the second thing was commercial real estate. They're seeing high vacancy rates, especially in office space, and we're having loans are starting to mature, and that's expected to increase loan loss reserves. So what they're doing, and they've been doing this for a while, these banks, if you look into it, instead of foreclosing, they're opting for what's called loan modifications to avoid booking outright losses on their sheet. So they're going in, they're modifying the loans, the terms, and all that to keep these loans off of foreclosure. And they call this the extend and pretend strategy. Okay, so commercial real estate loans increased by 66%, or commercial real estate loan modifications, what they're doing, and this extend and pretend increased by 66% over 4 quarters ending in June. Okay, foreclosing would force the banks to realize large losses on these loans. So, I think it's interesting. There's a term for it: extend and pretend. Uh, so that's what they're doing. So these losses, uh, although technically aren't there, but they're extending these loans to see if things will get better when commercial real estate, especially office space, and as we know, it's not getting better in that. And so they're still on their books, and at some time it's going to have to come off, and I just don't know when. But just be aware that when you see CNBC and these guys come out about the banks and how great our financial system is, that some of these banks have a lot of loans on there that they're extending and pretending. So just remember that. Okay. Whew. All right, let's go look at what we didn't do, but what we had on anyway. Okay. So we'll go over here, and I put on what I put on the list just for you guys. We'll go down here. So we had 4 Lamb, Bio, Generac, and Consolidated Ed. And I just put them when we put them on the list, what the price was. And yesterday did pretty good. The markets went up, 4 went up 7.37%. Lamb only 0.9. Bio went up 2%. Generac went up 2.38%. So about $1,100 if you'd have got in there. Nothing really triggered what I wanted to do. Again, I'm not going to trade when the market structure is broken. I don't think we did so well on the under the 200s, which I also didn't get into. Coca-Cola, Marsh McLennan, Brown and Brown, they were all down, a little bit. Not under my 2%, but still down. But Waters did okay. It went up 1.61%. So when you look at all that, it was still up about 197. So on an up day, it was pretty good, but nothing really triggered what I wanted to because the charts in my trading plan told me to stay out. Okay, the oscillators weren't there. The moving averages weren't there where I wanted them. So I just stayed out. But my trading plan can be different than yours, and you have a different risk strategy and management than I do. I put them on the list, and you guys can do with them as you wish. We'll go look at some charts now, and then we'll get to Trent. So let me share here. It's interesting here on the S&P. We had this huge candle on Friday, down candle. And then it's embellishing what we happened today. We came back up and everyone was happy. We didn't quite get back to where we were, but we're right here on resistance again, and we need to get past that. Today, we're going to open here. So again, the market structure for me is out of whack. Okay, remember we saw that before. It was kind of doing this. I just want to get it back to normal. And then the oscillators are telling me, they're out of whack too for me. Now we're above the 200. If you're an investor and you got in at the 200, you don't have to worry about all this. If you're a trader, you do have to worry about it, okay? Because you can trade in this kind of a market. I consider it more speculative for my risk management, so I just don't. But you guys can. But you can see where we're going to open on SPY and the DIA. Again, same thing. Big old candle. This isn't, embellishing the whole. We came down to the 50. We came back up. Now we're going to open right above the lower Bollinger Band. Okay, and the oscillators do look good, but don't look good either. And then the Qs, same thing. I mean, this is just a huge old candle just overtaking that. We couldn't get back. What we wanted to have seen yesterday is this to come back and come up and test where we were, but it didn't do that. We're under the 9. Right here's resistance, just like it was on the S&P. And again, the Qs, S&P are highly highly influenced by the top 7 to 10 stocks in their index, and you see the oscillators are down too. Now, if this would have popped back up and closed up, the oscillators wouldn't be showing this much of a downturn for us. Now, when you look, where's money going? And remember, I was talking about it was so strange for me that the equities market was going up while the gold and silver and the commodities markets were going up. So here was gold. And gold's going to open up again. It's just running along, right along. It's going to open up again right on the upper Bollinger Band for gold, and then silver also right up. This is the debasement trade, they're calling it. You hear that in the news. It's where they're worried about our treasuries, they're worried about our debt. People are going more to hard money, which is considered gold and silver, and some of the other metals. Copper took a dump on Friday and kind of came back up right to resistance again. Okay, on copper. Copper is used in home building and a lot of other industrial uh, type products. So again, we have this trade war going on. We look at Bitcoin. We had that big dump with that shorter. Some that shorted, and again, here we are. We're playing between the 110 and the 115 for the last 4 days. Ever since Friday came, got rug pulled, got a $20 million short rolled in there. We went through how the shorting process goes and how it cascades, came back up, and here we are. We're starting to more normalize in Bitcoin here, even though you look at the oscillators are down, but we're still finding support at 110. Resistance up here, you got the 50 and then 115. So we're still rolling between those two at this point. Ethereum kind of got hit. It was our Friday. We came back in. We're kind of rolling, and I don't follow it as much. But again, we're under the 9. We're under the 20. A little crossover on the stochastic, but still not on the MACD. So seeing money kind of flowing back towards that and kind of leveling off. MicroStrategy, of course, is leveraged on that. Can come down. Yesterday, hit on support and then move back up. We'll see what happens today. The oscillators have crossed over to the negatives. So you got support level here. We're going to open up right about where we've closed and opened before. So it's, we'll see what it does, but it doesn't look like we're going to open higher today for sure. NVIDIA is right. We're going to open lower. Here's NVIDIA. We had this big candle, came back up yesterday above the 9, right on resistance again. What's going to cause this to pump up? You got trade with China and NVIDIA, and rare earth metals. So we're going to open up down again. So again, small little candle, big old candle, embellishing this candle. Just doesn't give me hope. We should have seen a little more on that to get this market rolling. So again, I'll just sit out and wait for it. Meta came down, okay, right under resistance. We've hit this before, we're under the 9. We're going to open up right above support on Meta, getting closer to the 200 on Meta. So again, all these guys are going to open up lower. You're going to see the S&P lower, and you're going to see the Qs lower, obviously the Dow, Microsoft. Not so much, it's a big candle and still embellished, but not so much. And Microsoft, came back up above the 50, although we're going to open right here on support. So a very small channel for Microsoft. We're seeing the sideways pattern on the Bollinger Bands. Still got negatives on the oscillators. Apple, big old band embellishing, came down. Now we're under the 20. I didn't change this one. All my system went down right before I came on, so I had to come back and fix as many as I can. So that's not what we're going to open on Apple. I can tell you that. Google's going to open lower. We came up and hit right on the 9, and we're below resistance. But Google looking like Microsoft, just kind of more sideways, than we're seeing the downwards on NVIDIAs and the Metas. Amazon. There, look at that huge old candle on Amazon. We tried to come back up, but here's where we're going to open again. You can go back and see exactly. We're having a support level right here where we're going to open basically, and we're getting close to that 200. So we could test that. We get below that and can't get back up above it. That's going to be an issue for Amazon and probably for the mags and the indexes too, because of the weight of Amazon. TSLA, Tesla. Tesla's come up, kind of gone sideways along its resistance level. We got a Bollinger Bands are parallel. Came up. We're going to open right above the the 20 with inside the Bollinger Bands, but the oscillators still look bad on Tesla. Palantir, sideways on Palantir for quite a while. I got the Bollingers showing that, and we're going to open up a little lower again, but above the 50. So that's good. We have a good level of support. The 50, we were at the 20, but it's going to fall, and you see the oscillators have fallen off too. We look at, I didn't do anything for the watch list, but I did give you some stocks. Fluor Corporation. We put it on yesterday at this point, so it had a nice run up, 7.37% yesterday, above the 200. So that's what I liked. It made it above the 200, put it on the list, and here you go. So I personally didn't get in because I'm just not, I'm not going to get in this kind of market. We had the French fry maker, just pretty much got in sideways. We're bouncing off the 9. You got a kind of rolling over the MACD. The 9 is support. If you get below that, I would get out. But sometimes these things hit support and roll up. I don't know what it's going to do today. I did have it on here, but my system went down and wiped it all off. Bio, again, we had some pretty good day on these. Bio, put it in right here, right when it hit support and stayed on support and closed up above it. So we were up on Bio from when I put it on about 2% yesterday. Generac, same thing. We got Generac was on the list right here above the 9. We popped up. Now we're above the 20. So Generac went up about 2.38%. Okay. Waters. Waters did okay. I like Waters because it's running between the 9 and the Bollinger Band. You do have resistance at the 200 coming up here, but put it on right here. So it came down. Could have got in a little lower if you wanted to, but it's still rolling up and to the right. Again, these are all opportunities for people with different trading plans and different risk management or risk perspective out there. And then ED, this one didn't work out as well. This one, we tried to get above the 50, it came back down, right? And then resistance came on. So I'm not interested in ED whatsoever anymore. We looked at some of the QBTS, some of these quantum stocks are running pretty good. No resistance level up there, so they're running on momentum. Just be careful. Today's, a down day. We'll see, if low tide lowers all boats. RGTI is another quantum stock that's, oops, hold on, right number, RGTI. GTI, another one that's running, but again, remember, markets are down. When you run like this in a market like we're seeing, just be highly, put your risk management hat on. And if you have a good profit, be ready to put in a stop and, and get out of these just to save your profits. QUBT, this one, I believe, has hit resistance. Yeah, you got resistance right here at 2177. So you may want to be taking some off at that if you're trading it. If you're investing in it, here's your investable line from Paul Tudor Jones to 200. So you're still doing okay on that one. So under the 200, we put on a couple. Coke, that's down about 0.3%. We put it on right here, but it's still within its, between the 9 and the upper Bollinger Band. These are under the 200s. MMC, again, this one's back down within the range. You got the 9 crossing the 50. Just came back in. It's tradable. I'd watch these oscillators. Nothing I'm interested in. Bro, call it Bro, Brown and Brown. This one came down, actually closed under the 9. So this one's parallel converging Bollingers. So, and oscillators going down. So I would drop that one out of my contention. The one that's kind of interesting, I know a lot of people follow this. Sprouts is doing interesting things. So this might be one that if you want to trade today, had a nice close above the 9. We were along support. We're above the 9. We're getting some support on the oscillators. So if you have to trade today, you want to trade, this might be the one that would get you going. But, watch pre-market and watch what happens in the market and don't get rug pulled on it. But this one has the same kind of pattern we're looking at, but consider the market condition we're in. But if I were to have to trade, I would watch this one today under the 200.
Finally.
Yeah, didn't it take a nice long
Oh my God.
I mean, look at it. But we waited for it. We wait. Look at that. I mean, here's right along resistance. And then we started our downward trend in July.
It
So look
it
at that.
just seems like, I mean, not too long ago when, I was regularly trading and doing well with that stock, it
Yeah,
just seems like, yeah,
yeah, look
yeah,
at this.
yeah,
Yeah.
yeah.
And now it's coming back, a little bit. So, but be careful because of the markets we're in. But yeah, this is encouraging. And we've been waiting and waiting. Remember, it was almost like United Health when we waited for United Health, you know, and that took a while. For United Health, it went sideways, and we dumped, and now it started rolling up on United Health. So, they eventually come around. United Health, I'd watch this oscillator here, the stochastic. Um, but yeah, you're right. Finally, but
Yeah,
patience is what we need, right, Paul? You gotta have some patience.
exactly. Yeah.
Yep.
Well, the charts are
Uh,
beauteous.
yeah, AVGO. This had a deal with OpenAI yesterday, so it popped up right to resistance on that. When I look at AI, just AI here, it had an upper day too on AI, but we'll see what happens today with everything. Here's Bob's favorite stock, Fastenal with their earnings. They look at that, Bob, 29 cents, but boom. So they're getting close to the 200, and look at the oscillators just died on Fastenal. Um,
Hopefully Bob shorted it.
well, Bob always says he does, so we'll
Yeah,
see.
hopefully.
Um, some that are going to get traction, probably MP again today will probably get some traction because of the rare earths. And then you've got the USAR. So there are areas you can go if you want to trade, and these are rolling up momentums, and just be careful. But they're moving. These are rare earth. That's in the world right now, and a hot topic. Uh, Another thing that's gone up that we haven't talked about is the dollar has actually been rolling up. It's hitting right here on the 200. It can get above that 200. It's a slow roller up, but it's interesting because we always talk about the dollar, but the dollar is gaining a little more strength, and with trades on UUP, but it needs to get above that 200, kind of retest and go back up. So the dollar is kind of interesting. The banks we talked about, again, how where they're opening up. You know, if these things really do well and, the perceived and with the earnings beat and everything, these things should be taking off today. But when I looked at it earlier before my system died, these things weren't really taken off too high. And I think it's because they're looking at those credits that are building up, as far as what they're going to have to pay out on these delinquencies on cars, on autos, and then commercial real estate. So be careful in the financial area today. We'll see what happens when they take off. When you look at bonds, like U.S. Treasuries, there's iShares Treasury bonds, seeing bonds starting to roll up. Okay, right on resistance, and then long term, if people are moving into safety, there's long-term TLT moving up, but right to resistance also. So again, that's all I got. Yeah, I'm done pretty early. Now we can go over and I look forward to Trent every day to see what Dr. Doom or Dr. Happy has. I don't know which one he is today. Trent.
Dr. Sleepy, I think is what I am.
Okay, sleepy.
So this SPY, we talked yesterday about this gamma flip line at 663. Came right up to it, went through it interday, uh, basically closed right at it yesterday. Looks to open, SPY looks to open at 656, 688. So not it's a level of resistance as well, as well as going from a neutral, it's closed out neutral yesterday, so right at that line. And then with the news with JP Morgan and Goldman and all the other companies coming out with earnings, it's flipping back down to our negative gamma environment. And so we need to be conscious of that 655 second put wall. That's where market makers, hedges are putting in uh, support right at 655, but the bigger one is at 650. So it'll be interesting to see where we head today when we look at DIA. Um, Similar scenario, same verse. What is it? Second verse or whatever that is. Um,
Second verse, same as the first.
yeah. So this gamma line is really a powerful indicator of, are we going to be bullish or are we going to be bearish? And today we're going to be bearish. And so at least starting out of the gate. When I look at the Russell 2000, which is small cap, which is historically been a very strong returner, it's just struggled, or it's once again it's closed above the gamma flip line, so that was bullish, but looks to open below the gamma flip line at 242. This is IWM. This is the ETF for the Russell 2000. So we're now going to open in a neutral gamma area. So it'll be interesting to see where markets take the small and mid cap stocks going forward. And then this is the let's see here. This is the percentage of stocks above the 20, the 50, and the 200. And we talked a little bit about how Friday took the stocks below or above the 200 down to, looks at, well, there's a lot of things going on my screen here, um, down to 51.94, but rebounded yesterday to 55.13 on the 50. Stocks above the 50, once again, a rebound as well, but only 44.45% of stocks are above 50. And I think a front runner to the 50 and the 200 is, of course, the 20. And only 35% of stocks are above the 20. So keep an eye on this, because this is telling you, it's giving you a short-term indicator, a mid-term indicator, and a long-term indicator. And we're starting to see weakness on the short-term perspective of percentage of stocks above the 20. And as that breaks down, as we saw back here in April, and as we saw back in here in February into March, and then in November into December, it all sort of leads into the 50, the 200. And so once again, we're at that high valuation of stocks. At one point, 50% of the S&P was driven by AI and tech-related companies. So that's something that is starting to unwind a bit. When we look at the uh, VIX, we are officially in the chop bucket. We're at 21.79 pre-market. We're above 19, which is our line in the sand between investable and chop. Expect volatility, a lot of movement. This is like a lot of negative gamma environment. So when we're negative gamma environment, that's when market makers will go the direction of the stock. Higher volatility. So we could have, today we're going to see market makers come in and they're going to sell into the momentum, downward momentum of the S&P in particular, and in the Qs as well, in the underlying stocks. But if it rebounds like we saw yesterday, they buy into it, so they push into it. So as we're below that in that negative gamma environment, market makers and hedges are going in the direction of the momentum of where the stock is going. Whereas if we're in positive gamma environment, it's more of a neutral state. They just basically try to neutralize their book of business by selling calls at the top end and buying puts, and creating this very just a neutral, zeroed out portfolio, because they have to hedge that book of business, market makers do. And market makers, for those as a reminder who don't know what a market maker is, when you buy and sell a stock, you're buying, the market makers make a market for your buy or your sell. And sometimes they hold those positions on their own investment books, but they also hedge that book. So just keep in mind, when we're in the chop bucket and negative gamma environment, expect more of a higher velocity kind of movement in the direction of where things are headed. So if they're headed south, expect a higher velocity, higher volatility level of those stocks moving lower. And if they're moving higher in a negative gamma environment, they're going to see more velocity pushing them higher. So really produces a chop bucket kind of a position, because like we saw Friday, we went from a positive gamma in the morning quickly to a negative gamma, and the market accelerated downward. And we saw this volatility spike on Friday, like we saw here. One thing I want to point out, and this is the bond market. Bond market is gigantic. The options market is starting to challenge it on a day-to-day basis, volume basis. But bond market is where companies, countries finance uh, expansion or growth or uh, paying the bills like we do here in the US. I think we're $1.8 trillion as of September, close of September, we're 1.8 trillion short. So we have to go out and raise money, and we do that through the treasury markets, and we do that through 30-year T-bills all the way out to 30-year treasury bills. And so today, I've got the 2-year here, the US Treasury, and we're seeing the yields go down. So there's monies flowing into US Treasuries, both in the 2-year and the 10-year and in the 30-year. Did I lose my, oh, there's my 30-year. And so you're seeing the yields go down, which means the bond values are going higher. Yet, when I look at the high yield debt market, this is what they call triple B and below debt. So this is, if you remember, Sam Walton went to Wall Street and Michael Milken created a high yield bond, junk bond. Michael Milken was back in the 80s, 70s, 80s, was known for the junk bond era. And he helped Sam Walton finance the growth of Walmart. And because Sam Walton was a speculative, didn't know if this whole thing called Walmart would work. He raised debt, but he was willing to pay a higher yield for it versus, say, a U.S. Treasury bond. So they would, pay anywhere from like 6 to plus into the teens in percentages to raise money. Well, when you see expansion typically in markets, you'll see high yield debt or junk bond debt, the yields will go down. So we had that expansion period, what I would call expansion period uh, for the last uh, couple years really. And so we got into May of this year, and we saw high yield debt was at paying out at about average of 8.5%. And so when I mentioned it, they are representing triple B or below. When if you look at like U.S. Treasuries are I think double B, double A credit rating. Triple A credit rating is like the best. We got downgraded years ago at the United States, and so I think we're at double A credit rating. Single A goes triple A, double A, single A, triple B, and then you go into double B, single B, and then triple C. Anything below triple B is considered junk. It's high risk, high yield debt. There's a very high probability you won't get paid back on that buying that bond. So that's why they're willing to pay out more. So when I look at this high yield debt yield, we saw a bottom through September, August through September, and now that yield is going up, which means people are selling out of high yield junk debt because of risk of default. And when I see that happen, I go, okay, let's go back and look at history and what this tells us. And if I can go back all the way here, this is 2007, April of 7. So yield junk debt was paying about 7.42%. And when the yields peaked out in November of 08, they were paying, get this in line where you could buy average junk debt at 21% yield. So if you bought junk, say HYG is the ETF, you could buy like the worst crap on the market and be paid out 21.7% yield on an annual basis. Well, as the market started to recover and the bailouts started to happen, high yield debt became more in favor and the yields went down and the values of junk went up. And so what we're seeing now, in my opinion, is we're starting to see this capitulation or this kind of move here where junk is becoming questioned. And to me, that is this period of time. We're in this period between 2003 and 2007. And if we start to see a break higher, say above, we see high yield debt get over, just say 10%, that's when I think things go really bad. And that's when small companies, high risk speculative companies start to fail. And if we go back to 2000, see, we saw high yield debt back here in 98 was around eight, say 9%. It started moving higher. Yields started moving higher, so people got nervous about the debt or about speculative companies, and it peaked out around November of 2000 at around 14%, and then started to recover. High yield debt started to recover around 2002. So this period is that dot-com blow up. The housing crash was much bigger, as you can tell. So if we are in a 10 times the leverage of this period, the great financial crisis, where could high yield debt go? And so that's one of those cautionary items. So as high yield debt moves higher, treasury yields move lower, you're seeing a risk off environment from high yield debt to putting money in risk off assets like treasuries, gold, silver, palladium, platinum, those kind of things. So that's just one of those things you put in your toolbox, your process toolbox on risk management, and you go, what is the credit market telling me today? What is people willing to take risk in credit, or are they backing off? And uh, high yield index or high yield junk bond market is one of those leading indicators of risk on and risk off. And I think we're in this period of time where institutions are looking at their high yield exposure or junk bond exposure, and they're going, I don't know if these guys are going to survive. And we saw that during the dot-com bubble. We saw that during the housing market. So just keep an eye on it. Put that on your radar as one of those indicators. As where is this risk coming from? Um, that's what I got today. One last
You,
thing: momentum
oh,
or volatility in the Treasury U.S. Bond market. As you can see here, um, spiked on Friday. That's one thing to take into account. You can, in trading views, you can type in move. This is the volatility index for the US bond market. And when this thing starts to spike, you need to pay attention, because that means people are flooding into high credit or high quality bonds versus out. And as we've seen for the last, well, since April, we've seen the volatility go down, which means people are taking more risk. They're going into equities. Now we're seeing this pop in the move index, and some just keep an eye on. It's one of those indicators you put in your toolbox to measure and manage risk overall. So let's open up for questions, charts, and fun banter.
I don't think you went over the VIX, did you? The regular VIX?
I touched on it, yeah.
Oh, okay.
Go
So
ahead.
here, I mean, it's up today. It went down to the 200 and then came back up today. So we're at the 21 level on VIX, um,
Yeah.
popping up to 22. So just interesting that the volatility is still there, coming back. And again, I go back to um, what you showed on moving averages charts, the 20 to 50 and the 200. And
Yeah.
that's what shows me that, the market structure is, is falling
Yeah.
apart at a point right now. Is it needs to get back to norms, and it hasn't. And
Well,
and
it's
that's why I'm more cautious on it than most might be. And everybody gets excited about trading every day. I personally don't, so, but it's up to your risk tolerance and your risk factors. And I prefer to wait for the market to come back to me and give me back conditions that meet my trading guidelines.
Well, it's like I got Goldman Sachs up here, and let me just share this real quick if you don't mind. I meant to share JP Morgan and Goldman Sachs charts, and so this is Goldman, and their gamma flip line is at 787.50. So they dropped Friday like everybody else, came down to this. They closed out the day at 764, recovered yesterday. It's almost a mirrored image of the S&P 500. came up to that gamma flip line. Intraday went through it and then closed below it. Today it looks like they're going to open up at 764. So down roughly $22 a share. They're in this chop bucket again. Big support is right around 760. And then second level of support is around 755. So what this is telling me is this is the financial industry. This is a representation of that. When I look at JP Morgan, they reported today as well. They're above their gamma flip line at 302.50, but look to open up at 305.15. So basically $3 and some 10 cents above the gamma flip line. Well, JP Morgan's a big whale in this small ocean of finance. They move markets, they move money, they finance money. If these guys break below that 302.50 mark, that's when things could get a little hairy. But there's support at 300. That's where your put wall is, and then your next level is 290 and then 280. So your high resistance level on the top side is about 315. That's where the bigger resistance level is. So I'm really curious to see where JP Morgan closes out the day or even this week. And does it stay above this positive gamma environment, and the volatility within it stays suppressed? So some to take into account
Put
when you're
up
looking
put
at
up
these
BlackRock.
stocks.
Put up
Oh,
BlackRock and see what they're doing on your chart. Be
yeah,
okay.
I don't know if was it be okay?
Be okay. Largest asset manager in the world. Just came out with earnings.
Yeah,
Now you're not going to get credit
doesn't.
card risk on BlackRock, but
Yeah, so my thing doesn't track BLK. It only tracks 165 different stocks. They're looking to
okay.
expand it. But yeah, I mean, you're at looks at like it's down $2 and 12 cents pre-market. But you're like you said, they don't they don't have checking accounts. They don't have credit accounts. These guys are asset managers. So they're picking up fees. And I saw him talk on Larry Fink talk
Yeah.
on 60 Minutes last night. And I just I was so funny. I was watching it and I was like, wow, this guy lies so well. He's just he's a bullshit artist. You know,
I didn't see it. I didn't see it. What did he say?
he got questioned about Bitcoin and crypto, and he's the one who said, yeah, it's basically crap. And now he's got the largest ETF, IBIT ETF, and now he's
But
saying,
but
oh
he
yeah, you should
but he
allocate to it now. All he's in it for is how many more assets can I raise and how many more fees can I collect? I
I do
mean,
give him
that's what
I
these
do give him
guys do.
credit. I do give him credit because he did look into it and he did say, look, it's an asset, it's done its job, and I'm an asset manager, so that's what we got to do.
Yeah, he is.
So
It's just so funny to me how they flip the script. They go from one thing to another. And when they're saying one thing, like the negative side, they're building a position, and when they flip the script, they profit big. And they're like you said, IBIT is one of the most successful ETF launches ever. And it continues to be. And I think it's just one of those things. I was listening to him and I was just like, you're just becoming
but
richer
all
and richer.
but he's not alone. I mean, anyone who's gone through Bitcoin has
Yeah.
first been a denier,
Well,
okay, and that's junk. And
yeah.
I went through it myself, okay. Uh,
Yeah, but you
and
didn't publicly manage $9 trillion and say it,
well, not
I
9
mean,
trillion, maybe 6, but not 9. But we'll get there at some point.
true,
But
true.
yeah, it's not like I'm managing the Grinkmeyer empire.
Right.
So anyway,
Crossing the bridge on a balsa wood bridge. Great.
yeah.
Crossing the Grand Canyon on a balsa wood bridge here at the Great Mire House.
So someone asked about why did the market jump up so much yesterday and Sunday. It all goes back from my point of view. It went back to Friday after the market closed, but not the crypto market that Trump tweeted that he was going to do. Is actually going to do a 100% tariff on China on everything beginning November 1st. And of course, it spooked the crypto market and $20 billion was lost, 1.6 million accounts were wiped out because of leverage that was in there and got margined out. And then Sunday afternoon, he tweeted out, says, "Oh, we're basically, Xi's just having a bad day, and don't worry about China." And so the markets took that as good news, and
Oh,
off they went. And it was too late for the crypto markets, who kind of recovered. And then last night, the Chinese came back, and they're starting to raise taxes on ships that come to port on each other. And the Chinese they vowed to fight to the end on this, and so that got in, and that's why we're seeing markets looking down this morning. It's a bunch of news and rhetoric on tariffs. And for a long time, when tariffs first came out in April, we went down, and the tariff, we came back up, and then no one talked about tariffs, and now tariffs are back in, and here we go again.
well, here, as I pointed out yesterday, on Friday, 54,800,220 call contracts were bought Friday as the market was falling. Okay. You come into Monday, they knew, he was going to come out and cover his butt. I mean, that statement. We're going to throw 100% tariffs on everything. Holy cow. You talking about, you know, elephant, elephant in a china shop. Holy crap. That's one way to blow up a market. But somebody knew, people knew, hey, he's going to come back and retract that. He's going to do it. He always does. And so they bought 54 million call contracts. Look at the whatever the fair face value of that would be on in ops. That's a lot of money. And then
Yeah,
Monday morning it opens up and gaps up, and boom, these guys hit their levels, their gamma flip line levels on the SPX and all the indexes, and boom, they were out. They made money. I would be interested to know how much money was made on Monday by doing that.
yeah.
And now look at today. Market's pulling back. We got earnings, JP Morgan Chase, Goldman. All these guys are going to open a little bit lower today, if not a
Well, and
big amount
it
lower.
goes right back to the credit risk that they see in their books, and then this commercial real estate that they're not putting on their books, they're, what they call it,
Yeah,
extend and protect, or pretend,
right.
extend and
Extend and
pretend
pretend.
strategy. And then,
Yeah.
the China coming out, Bessent was out all day yesterday, kind of calming down, all this tariffs, we're going to work it out. We're talking. Well, last night, Beijing, China began imposing additional port fees on vessels linked to the U.S. Um, and so today, Bessent came out, I guess that pissed him off a little. And he was talking to the Financial Times. He said that Beijing is trying to damage the global economy with its export controls on rare earths and critical minerals, sending some global supply chains into snarl conditions. This is a sign of how weak their economy is, and they want to pull everyone else down with them. Maybe there's some Leninist business model where hurting your customer is a good idea, but they are the largest supplier in the world, and if they want to slow the global economy down, they will be hurt the most. He added, they are in the middle of a recession, depression, and are trying to export their way out of it. Problem is, they're exacerbating their standard in the world. So it's starting to flare up more between the two, and we'll see. They're going to meet supposedly still in 3 weeks, and this could all be part of the pregame. But it does affect the markets.
Well, and I think I talk a lot about the options market. We are in this environment of chop. And when we're in a negative gamma environment, whichever direction the market is going to go, the market makers are going to feel it. So if the market heads down, they're going to sell into it. So they amplify the selling. If it goes up, it's going to amplify the move higher. Once we get above a positive gamma, things start to mellow out and so on. But I think just this is one of those areas where we've entered a level a section of concern. You can make money if you bought stocks yes or Friday as the market was going down. You made money in yesterday,
If you got
and I
out.
think that's for the swing traders, for the day traders of the world. This is what you want, is volatility, and if you can pay attention to the underlying variables of it, um, you can make some money. But from an
You can make a lot of money with
long-term investment
volatility.
standpoint, a lot of risk ahead, in my opinion.
I think there's risks for me in trading right now just because of the market, condition that it's in. And it's whacked out my charts, and so I got to wait it to come back into
Yeah,
equilibrium, so my charts work better. But I'm in no hurry to get in, and I'll let it play out when things normalize
are
on the
freezing.
charts, because everything looks backward, and we're talking about a 200-day, and we're talking about a 9-day moving average. We're talking about stochastics and MACDs tied to the 9-day moving average, and so you have a big day like we had last Friday, you got to recalibrate it and let it settle out, and it's like all your gauges fried out and they're going to come back up. You got to reset them, and that's what I'm waiting for. Bob, we did a little thing. I showed Fastenal. What happened with Fastenal?
They're they came out and warned on their earnings call about the fourth quarter squeeze. And basically what that is tariffs and absorbing. They've been raising their prices, but others have not. So they're getting squeezed in both directions. One, consumer or their customers are not willing to give them the orders because they can buy cheaper from a guy like me. So um, they're feeling a squeeze right now going on from both directions.
Do you do any business with Fastenal at all?
Oh yeah, about 100 of their locations buy from me.
Oh, really? Okay.
Oh yeah. I can show you a laundry list of all their locations that we constantly do business with them.
You manufacture here in the US. Is that right, Bob?
What's that?
You manufacture here in the US. Is
Now,
that
both
right?
places we come out of Taiwan and we have some here.
Okay.
So are
But
you seeing
they
what
buy
are you
from
seeing? Are
us.
you seeing any difference in your business out, as you're looking out, the next quarter or two?
We seen a kick up, as I told you, in business, but it's not significant enough. Um, it's like waves. It's doing this. Um, but we've gotten some really nice orders that we were not seeing. So, um,
What do most of your products go into? Is it housing or is it industrial
manufacturing, single
manufacturing? So
manufacturing products. Um, housing, there's not much happening there in construction. So we've lost that part of the business due to the downturn uh, in construction. Um, but we just sold security nuts. These are breakaway nuts that they turn on and then they break away once you tighten them up. And this is to some data centers or something. We just sold like almost 100,000 of them to a specific project. I
uh,
don't know why they're using them, but they are.
well, that's
Keep
good
using
because
them,
you
right?
think of manufacturing is not doing as well, but maybe with the tariffs, we're seeing more manufacturing fire up here in the
It
U.S.
it is coming in here. It's just not significant enough. Yeah, they're playing games. There's a game going on out there, moving product to other countries and then moving it into the US, things of that nature.
Okay. Pat would like us to look at the VIX again. You want to do that, Trent?
Sure.
Good. Thanks.
Let's see here. So this is the VIX. This is Friday's big event, up 31.69% on Friday. Came back down 12.15% yesterday, but came and closed right on that 19 level between investable bucket and chop bucket, and then it has bounced again today, up 13.83%. I think this has a lot to do with earnings. It's also the bond market is open today versus yesterday. So anticipate some volatility in the market today. Um, Overall, I think that's you'll when we're in this zone, this is when things move
Can you go
wherever the
back up?
momentum direction is going.
Can you go back and see where you have several or other times where it looks like this chart, or oh, there's where it went into the F bucket over there.
Yeah, so this is April, March, April
So
here.
was that during the Liberation Day fund?
Yeah, so
Okay.
we peaked out Liberation around April 7th. But you could see what sort of the volatility we saw from July of last year. We had a blow up as well. And we kept on entering the chop bucket, exiting, entering the chop bucket, exiting, entering the chop bucket, exiting until Liberation Day, where we skyrocketed higher. And I think that's one of those things that you keep in account is we're now back in this chop bucket. We're, if we get up around 27 here, um, good chance we'll start to see something similar to what we saw, say, back here from February of this year to March, back down into the investable bucket and then skyrocketed. So as we saw Friday, this was a unknown market event. Some people knew,
Exactly. Yeah.
but it was an unknown market event. So keep that in mind. You know, we don't know what's going to trigger anything big selling off. So just keep that in account as we look at
It,
this.
it, it looks like if you put a horizontal line from where we are today back, it looks like we're at a level of resistance by going back and looking where those other peaks are. Look to the
Yeah,
left.
yeah, all the way. I mean,
Especially back, yeah, right in there, yeah. So if we get
you get
past that
into,
level, that would be major.
yeah, around just say 25, 24, 25. Let's go even further back. Let's go on a weekly chart. Takes you back to 1990. You can see where resistance, we get in this 25 range, 22 to 25 range, and you see resistance throughout history going all the way back. So volatility can be your friend or it can be your enemy. Just
Right.
understand when you get in this environment, whatever direction the market is moving, you're going to fuel it whichever direction. If it's going up and volatility is in the chop bucket or gamma is negative, it's going to go, it's a momentum. So if you're trading or even just long-term risk managing, I look at right now, I posted it on the Discord, the Tell Sheet 12, that I should be really stoked about the fact that since I introduced that in June 16th of this year, I'm really concerned about it because I think this morning I checked, it was closed out the day up 90% since June 16th. To me, that makes no sense. To me, that's risk. And if you're using it, have a risk management process. I mean, it continues to go up, and I think I started thinking about the correlation that portfolio has to, say, the Mag 7 or the big mega cap stocks, and there's a bit of opposite correlation there, but still, if things go bad, it goes bad for everything. And so when you're up a lot, just have a process to get it, a risk management process, an exit strategy, because you don't want to lose it.
Yeah, I mean,
You
we're at
worked hard to
all-time
get it.
highs. We got valuations that are all-time highs on companies. We've got 7 companies that are moving the markets. Okay, high concentration. A lot of this stuff is the same thing we've seen. I've been saying it because I'm a student of history, that we see before we have downturns. In the market, it's not different this time. Everyone's saying it's different this time. I've heard it's different this time in '87. I heard it's different this time in 2000. I heard it's different this time in 2008, and it's not different this time. It never has been.
I,
I
I've
can't
heard
tell
it.
you.
I've heard it this month.
Yeah, yeah. And in the
So
market, we could go up for another 2 years. And I always go back to the Big Short. Michael Burry was 2 years early, but he was correct. He just didn't have the time. The market can outlast you. I think I put it in my, more than you can sustain your bank account. It can outlast you.
yeah, and honestly, I still wouldn't be surprised if we hit 7,000 on the S&P by year's end. If we continue this October volatility month, and we see downward, we see some drawdowns, and we get down to some support levels, I wouldn't be surprised we get in November, December, and we see this thing take off again. It's getting into next year, and credit risk becomes my bigger concern. So
Well, we're seeing it in the banks. I mean, they're hiding it, you know.
yeah,
Remember,
eventually it'll come out.
extend and protect. Remember that
Yeah.
term.
I'm gonna start using that.
Well, the bank, yeah, I can't believe they actually use it, but it's extend and pretend. So extend
That's
it out,
right.
pretend it's not there. You know, bury your head in the sand and forget that you have all that on your books that you're just extending out. So at some point,
That's right.
they're going to have to pay the piper. But you know, it might be a year, might be 2 years, might be tomorrow. You never know.
Never know.
Yep.
All right, Mark. Let's
Whew.
wrap it up there.
I'm exhausted already. It's only Tuesday.
I know. You can tell I'm like exhausted. Got
Well,
a
hopefully
handful
you
more
guys-
days
hopefully
here
you
in
guys-
Texas.
Yeah, you guys.
What's
I
that?
hope you guys are profiting as you do, and you follow your own plans and your risk strategy, and you're always welcome to include in the chat or talk out. You know, take your microphone off and talk. We're always good. And anyway, we're going to let you go, and we'll be back again tomorrow. We're out. Trent and I are on the Discord throughout the day, not 24/7, but we get to it as soon as we can. So if you have questions or anything, he's got an office, I've got an office, Kerry's got an office, so use it.
It's beginning to
All
sound
right.
like a bunch of old men over at the Legion. Everybody's tired out.
Well, we are old men, but we're not the Legion.
Oh,
But I do like the,
I didn't think
do-
Trent was an old man.
Oh, close. Feel like it.
I do like going to the Legion though, Zeke, because I meet a lot of good people and there's always cheap beer there.
Yeah, me too.
Like
All right,
$2
guys.
beers.
Guys and
Mark,
gals,
can you
thank
handle
you.
a real quick question?
Okay.
I mean, real simple stuff. Has to do with trading view, the indicators, metrics, and strategies, MACD. There are about 400 different things to check from. Do you use the technicals? Do you use the MACD strategy, or do you use what I see here is moving average convergence deliverance?
The last one.
Trent, yeah, I don't use Trading View. Trent does.
Yeah, I use the last. This.
So
Pure
MACD
one.
strategy.
Yeah, it's the last one you rattled off.
I do a lot of
let me
rattling
see.
these days.
Yeah, the one with
Moving average convergence.
The moving average
divergence.
convergence. That's the one I use.
Got it.
That's what.
Okay.
Yep.
Perfect.
Yep, that's
Yeah.
it.
That's okay.
Cool.
All right.
Got it.
Cool beans.
All right,
All right,
guys.
you guys have a great day.
Bye.
Thank you guys for everything.
Make a lot of cash.
Yeah, of course.
Bye.
Be careful.
All right.
Bye. Bye.
Bye.
Live
Bye.
loud. Take care. Peace.